Hey there, welcome back to Factful Finance, the place where we tackle your money questions with the depth and clarity you need to feel empowered. Today, we're diving into a hot topic, one that's more important than ever: crafting an impactful investment strategy with ethical principles. Did you know that ethical investing is one of the fastest growing trends in the market right now? More and more people are realizing that their investment choices can align with their values, whether that's environmental sustainability, social justice, or corporate responsibility. But here's the question: how do you build a strategy that's not just about the financial return, but also the positive impact? Let's explore this step by step. First, let's acknowledge the elephant in the room. Ethics and investing have often felt like strange bedfellows. After all, the primary goal of investing is to make money, right? But as we've seen over the last decade, people are waking up to the fact that they can still generate wealth while supporting businesses that uphold values they believe in. This is where the concept of ethical investing comes into play. So, where do you start when you want to craft a strategy that aligns both with your financial goals and your ethical values? Step 1. Understand what ethical investing means for you. For some, it's all about avoiding industries that contribute to harm. Think fossil fuels, tobacco, or weapons manufacturing. For others, it's about actively seeking companies that promote positive change, like those that support environmental sustainability, diversity, or human rights. There are different strategies within ethical investing, like socially responsible investing, SRI, environmental, social, and governance, ESG criteria, and impact investing. But let's break them down briefly. 1. Socially responsible investing means selecting investments that align with your moral values. This often involves screening out companies that don't meet your ethical standards. 2. ESG investing takes a slightly broader approach. It's about looking at how companies perform in 3 key areas: environmental sustainability, social responsibility, and governance. Companies are ranked based on these factors, and you invest in those that score well. 3. Impact investing is a bit more proactive. It's about making investments that are intentionally designed to generate positive social or environmental impacts while still earning a return. Step 2. Do your due diligence. Now, this is where a lot of people drop the ball. Just because a company claims to be green or ethical doesn't mean it's actually living up to those claims. Greenwashing is real, and it's happening everywhere. So don't just take their word for it. Research is key. Look for independent ratings, check ESG scores, and review the company's track record. Websites like Morningstar, Sustainalytics, or even corporate social responsibility reports can give you valuable insights. And remember, just because a company markets itself as ethical doesn't automatically make it a good investment. You still need to assess its financial health, growth potential, and overall stability. Step 3. Diversify your portfolio. A lot of ethical investors think that their options are limited to a few niche sectors. That's simply not true. You can still build a diversified portfolio while adhering to your ethical principles. In fact, it's one of the most important strategies for managing risk. So how do you balance your ethical values with diversification? The key is to find funds or ETFs that focus on ethical companies across a range of industries. For example, an ESG-focused fund could invest in renewable energy, tech companies with strong diversity initiatives, and sustainable agriculture, all while ensuring you're not overly exposed to any one sector. Step 4. Think long-term. The thing about ethical investing is that it's not just about quick gains, it's about long-term value. You're supporting companies that are making a positive impact. And over time, these companies tend to perform well financially because they're forward-thinking. In fact, a study by Morgan Stanley found that sustainable investments often outperform their traditional counterparts over the long haul. But there's more to it than just the potential returns. Investing ethically means you're supporting industries that could shape the future in a positive way. It's about betting on companies that are solving the world's biggest challenges while growing their business. Step 5. Stay informed and be flexible. The ethical investment landscape is evolving rapidly. New funds are being launched, policies are being updated, and markets are shifting. That's why it's crucial to keep yourself informed and adjust your strategy as needed. Follow industry trends, listen to expert opinions, and make sure you're staying on top of new opportunities. But remember, while it's great to have values driving your investment strategy, don't let that blind you to the bigger picture. It's about finding that sweet spot where financial growth and ethical values coexist. Let's wrap this up with a real-world example. Meet Olivia. Olivia is passionate about climate change and social justice. When she first started investing, she focused on traditional stocks, but over time, she realized she wasn't comfortable with some of the companies she was supporting. So she made the shift to ethical investing. She started by researching ESG funds and found a few that aligned with her values. She also added some renewable energy stocks to her portfolio and started investing in a sustainable agriculture ETF. After 3 years, her portfolio wasn't just performing well, it was making a real difference in the world. Her returns were strong, and she felt proud knowing her investments were helping tackle global issues like climate change and food security. The bottom line? Ethical investing isn't just about doing good, it's about doing well, too. Want to take your investments to the next level? Start by aligning your money with your values. Because the truth is, your money can make a difference, and so can you. Before you go, here's a quick reminder. This content is for educational purposes only and not financial advice. Always consult a certified financial professional for personalized guidance. So what do you think? Ready to start building an ethical investment strategy? Drop a comment below. I'd love to hear what's important to you when it comes to investing with impact. If you enjoyed this deep dive, make sure to hit that subscribe button so you don't miss the next video. And if you found this helpful, you're going to want to check out the video on screen. Trust me, you'll love what's coming next. See you soon, and let's keep making those smart financial moves.